Good morning, everybody. Happy Monday. It's going to be a kind of a repeat of Friday's show in terms of our tone and in terms of our sentiment. A lot of growth getting punished here this morning. Crypto, Bitcoin, ETH, all that getting hammered. A lot of growth stocks trading down. We do have an M&A deal, so that's exciting. Talk about that. We'll have Tim Quast on the show. But yeah, we got to go on here. The market is weirdly kind of quiet, the overall market, but if you dig a little bit deeper below the surface, things are still pretty crazy here. So we'll talk about it now, and let's start the show.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, good morning, everyone. Let's bring on Joel. Let's bring on Dennis, both of whom had the sports weekends of their lives this weekend. Good morning, Joel. Good morning, Dennis. What's up? Is that an accurate assessment of your weekend?
Why did
Was the Lions
David
one?
did David McConnor do something or
No.
what
Yeah,
happened?
I figured Michigan
Oilers
won.
were bad.
The Lions won. I figured it was a great weekend for you both. No?
Oilers were bad.
Well, I got to go. Well, first of all, on Saturday, you talk about having fun. Went to the basketball game in the afternoon with Dana and Lisa, and they looked great. And then we kicked the tar out of the Hawkeyes and going to the semifinal. I could be. I've texted that. He texted me congratulations, and I'm like, I'm retiring from stressful stuff. I'm done with like Michigan. They beat Ohio State. Boom. I'm happy. I can move on. The markets are stressful. I'm done with stressful things.
Okay.
I'm happy. And then the Lions, I was cheering. I told you, Dennis, you don't know
knew they were
nothing
gonna
about
win.
football.
You
I
knew
told
they were
you.
gonna win.
I told they just got
They
hurt.
lost 7 in a row after I tweeted that they were going to go, but they finally did win. So it was never in doubt. We knew that they were going to win that game. Never even
You know what?
after the first half, you knew they were in charge, and there was no doubt they were going to win it. Everybody just knew they were going to win.
There is a market lesson here with the Detroit Lions, because if you were like Joel, that were like, yeah, they're not going to lose every game. Of course they're going to win a game. This is so obvious. Well, Joel was right. ... Eventually, but Joel took a lot of pain.
Behind the
It
dip.
started to get scary.
Right. It's starting to get scary. So there's a lesson here in terms of timing the market and time, because you could be right.
Yeah,
There-
behind the dip, right?
Yeah, there's not a lot of difference between being wrong and being early, right? Because you're both wrong. You just, So
Yeah.
anyway, Joel, why don't you bring up your chart?
Markets.
Yeah,
Markets.
Tell us how I would have thought things would be a little more fireworksy this morning. I guess
Oh,
not.
it's still early.
Very early.
We're up 11 and a quarter. We had some nice fluff on the close, and then we went to 71.75 overnight. Nothing up there. The pre-market low is not in a bad area. It's just below the close, so but that's a big area. 45.31.50 on the downside. Will they just press it to 4,500 again? Looked at I did do my write up on Friday. I was like, man, I just gotta take a day and look at the markets and see, just get all the noise, because we were only down like 60 handles last week. I mean, it seems like, the market got crushed and the whole world's falling. Some stocks did get crushed, but I looked at it objectively. Potential double bottom from last week, right? 44.92. 4,600 we snuck over on Friday and then got crushed. So I'm just gonna calm, cool, and collected. My bogey on the downside, danger zone, below last week's low, folks. Look out. And if you don't think a chart like that means anything when you got air, I mean, you could just look at like DocuSign. You can look at these other stocks. When there's air underneath a stock, right? And it goes quickly up through an area, come quickly down through here. DocuSign, Asana. I mean, I'm not saying that's going to happen, but I just think you should be aware on your charts when you're looking at kind of these things. You had a 8 day rip here that was unbelievable. Let's move on from the spoos.
Yeah.
Crude's up a buck 91, 68.17. Gold down 415, 17.80. Silver in the red by 14 cents. I'll come back to Bitcoin. It's getting walloped. It's down $4,900 at 48.5, and then Ethereum's down 134 at 4,080. Triple D. This is why you're so good at technical analysis. You barely use it. You looked at you looked at this
Yeah, it's true.
Bitcoin chart. Was it Thursday or Friday? It was one of those
Wednesday, I
days.
think. It was
Wednesday?
Wednesday or Thursday. It was like
Yeah.
54,000, and it looked like hell. And I'm like,
Yeah.
everything is falling apart in growth and in these hope trades and high valuation stuff, which Bitcoin doesn't even have a valuation. And then you have a chart that looks like that. I mean, the setup for being short Bitcoin was just incredible. I couldn't help myself. I had to sell my Bitcoin looking at that chart, so I did. I think I sold it Friday, Thursday. I'm getting days confused. So maybe
Yeah,
this was
it
Friday
was
morning, and then I was like, I gotta sell it. That chart just looks too terrible. I sold around like 53 or 54,000. Then the implosion over the weekend did bounce back. I think you got to sell that bounce, man. You went down to 40,000, and a lot of times what you see is these
it went down to
flushes, and you get the dead
40.
cat bounce. Eventually, there's going to be a retest of that. So I think eventually we retest that 40,000 on Bitcoin. I don't want to be long anything besides value stocks right now.
The cash hit 40.
A
Did you?
41 maybe. How low did
Okay,
we
because
get, Spencer?
Yeah, that's a good question because I also just keep
On
it.
Saturday morning? I think we got 40 or 41. It
oh,
it
whoa.
went down like
Problem.
$10,000 in like 20 minutes. It crashed like flash crash style.
Well, when
Um,
you texted me, I was hopping in the pool and I saw it was down
41,
like
I think.
5 or 6.
Chat, can you help
Wow.
us out? Bitcoin at what? 41,000 Saturday morning, Friday
problem
night,
is
Saturday morning.
the problem is every exchange will show like different things,
I know.
right? But I like for example, CoinMarketCap shows a low of 45.
Yeah, no, it was a lot lower than that.
So
42. Some people are saying in the chat. James is saying in the chat
all right,
42.
42.30. All right, if that's what you saw, I wasn't.
Yeah, it's obviously different on different exchanges. Why the efficiency is just not as efficient as you think it is.
Yep.
But 24-hour markets too make it. It hit 41. Okchess is 41. James is 42.
All right.
So we could say 41, 42, 42. We'll safely say it hit 42.
So we got a bounce. Is the takeaway here?
It's a bounce. It's a bounce to sold. Where is it? 49?
Yeah, 48.
Yeah, it's a bounce to be sold in my opinion.
Okay. Well, yeah, I saw your tweet about that. You sold some Bitcoin.
Yeah, well, but I
It
sold
was a
again on
good.
Friday when it's 53.
It was a good sell. The question now is
Do I
how
not
do
get
you
back in time?
how do you buy it back? But that's not a question for today.
It's
Uh,
just this market, and this is it wasn't even so much that the Bitcoin chart is terrible. It's that anything that is not value is getting hammered right now. I mean, value stocks are holding up very well. We know that. You even see Apple up this morning, which is considered value tech. I don't know why, because it's not that cheap. But value stocks have been holding up fairly well. I mean, there's a clear trade into defensive stocks too. I mean, Procter and Gamble, Joel, on Friday hit a new all-time high. Procter and Gamble PG quietly hits an all-time high at 150. So, I mean, you can see the market that we're in is this market is playing defense. It's like flying out of high growth names and moving into cash now. And that's the inflation trade playing there too. Because again, we'll just say to the new listeners, because I say this a lot, but those future earnings are worth less in an inflationary environment. So if you're banking on a high growth stock because they're going to make so much money in the future, well, this amount of money you think they're going to make in the future is now worth less in an inflationary environment because those future dollars are worth less. Dollars now are worth more than dollars tomorrow in an inflationary environment. And that's what we're in right now. So until we get the inflation in check, I don't know if money managers are just flocking into all this stuff. And the problem is that all these trades are so crowded because we've had 10 years where growth has outperformed value and everybody has been paid to buy the dip in every growth name the whole way. And that's not happening in the last month. They keep getting hammered. ARK is down every single day. rightfully punished so, because she's on the exact wrong side of the trade, which is what we've said. So does this just turn around on a dime? I think you can see a dead cat bounce in some of this stuff, but I would be a seller of those bounces. So again, just like even on Friday or Thursday morning, we saw a little bounce in ARC where it bounced 2-3%. And where was this? Thursday maybe it was. It bounced from like 98, 97 to like $100 in a matter of an hour and a half. It's like that was a nice bounce. And then it just resumes its downtrend because there's so many people caught long all of these growth names. There's so many people that want out of that trade. They're using any strength to get out. And that's why it's difficult for these stocks to just come back. So you can say, oh, yeah, maybe ARC's going to be a $150 stock again, or ETF. And it might be. Maybe all these growth stocks come back. Maybe one day they will. But if we are in, say, December of 2000, where the tech bubble has burst, and it burst around the same time. It's uncanny how,
Yeah, it
how
is. Remember
how
that?
close it is.
Wow.
If we take the 2000 December and look at the tech bubble, and say it obviously popped. We didn't know it at the time, but it popped in March of 2000. In the summer of 2000, we almost made new highs again on the Qs. We actually really got hammered
Yep. I
in the
remember
April, the
that.
May, the
Yep.
June, and then we had this summer rally, and everybody thought, oh, here we go again. And then September, it took till September, October before we really started to get hammered again. So it wasn't like, boom, we crashed. It went like this, and then it came and it stayed and hung out for like 6 months. And then we started to just cascade. And we cascaded for the next year and a half, death by 1,000 cuts. And that's when the NASDAQ fell 81%. And that's when Amazon fell 95%. And yes, Amazon would turn out to be a good buy. But there was a lot of other ones fell 95% that ended up actually falling 100%. So the question is, if we are following that playbook, now we're getting into the cascading part of it, where it's death by 1,000 cuts. And they just knock you down a couple percent every day, a couple percent every day. And you look back and you're like, oh my gosh, ARC lost 25% last month. When did that happen? Couple percent a day, couple percent a day. So don't expect like a whoosh, a crash. It's just slow bleed as money slowly comes out of growth names and slowly goes into value names. And value outperformed growth for the next 7 years after the tech bubble burst. Are we going to go into that? I don't know. But I think you're too early to just come in here and say, I want to buy the growth names. I think it's too much risk here. There will be a bounce, and you may get lucky and catch that bounce, and anything is tradable. But as a longer term investor, I think you got to wait until at least we stop going down.
Can I offer a hypothesis here? The
Please.
last 2 weeks were pretty tough. What do we have next week? Trivia question. Does anyone know what next week is?
Oh,
I'll tell you.
well.
It's the last Fed meeting of the year.
Oh,
All right.
I was
nice.
on mute because I was drinking water, and Dennis gets mad at me when I drink on the air. I was going to say,
There, let's take that
All
tangent
right.
there.
All right. So
He slurps.
my 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 hypothesis is this, right? Last 2 weeks were pretty tough. This week may well be more of the same. If we can get some clarity next week, next Wednesday specifically, with regards to not just the taper, right? Because we know that they're probably going to speed that up a little bit, but a rate hike, right? How many, when, timeline for that? If that unknown becomes a known, because right now it's really just speculation, then maybe the market figures, okay, like prices that in, like figures it out. All right, understands how we feel, and that eases some of the uncertainty, and we can proceed. We can all move on with our lives. Basically, the market can sort of move on, uh, as opposed to what it's doing now, which is trying to speculate. Is the money printer going to get turned off? If so, when? How dramatic of a turn off will it be? um maybe next week can mark as sort of a turning point, just in terms of clarity. Just an idea. I don't know.
If he backpedals,
Well,
because
well,
this
that's
all
not what
started.
I'm saying. I'm saying, what if
No,
he?
but that would be
All
how
right,
we would see a turnaround and all this stuff. He
all
would
right.
need to backpedal and say, well, maybe, with Omicron and everything, maybe we shouldn't worry as much about inflation. But this is not. Don't kid yourself, people. This has absolutely, this sell-off has
yeah, I was going to
absolutely
agree. Yeah.
zero to do with the new variant Omicron. It has zero to do with it. It has 100% to do with what Fed chairman said a week and a half ago or a week ago
I
when he
agree.
dropped the word transitory. And that is why we've been selling off, because everybody's like, oh shit, He's cutting off. He's taking the punch bowl away. He's taken the punch bowl away. He has actually physically said that we might need to hurry up the tapering. We might need to
Yeah,
hurry up the interest rates. I
yeah.
mean, this is not what the market wanted to hear. And that is why we've been selling off. And you have money managers that are like, we are not positioned for all of a sudden the punch bowl to not be here. And
We have um
we need to start selling some of these growth names fast. And
we
that's
we
what we've
have
been seeing
a chatter of the day, and that's gonna be Topsky. You know what else we're coming into? Not this week,
now. Yeah.
but next week.
I'm
What's
trying to
next week?
I'm trying to find the Topskis comment and I can't.
Yeah, he's very. And you know what? And this is going to
Read
be
it
a
off, Joel.
quad witching.
And I mean, that sets up for a lot more volatility. So the one thing we can promise you on this is that this volatility is not just going away anytime soon. And that's a good thing for traders. You know, you
Yep.
have to embrace volatility. You know, as traders, and that's the kind of strategy we try to teach in our educational stuff is, you know, we're looking at stat-arb, we're looking at different things. Somebody says, you know, I was saying I said I had one of my best weeks, if not the best week, I believe it was, of the year for me last week. I think it was my best week of the year. It was close. There was a week, I checked back to the sheets. It was a week back in February, I think, or it was probably when the growth was getting hammered too, where I had a really good week too. But it was very close to being one of my best weeks, despite me being sick all week. So if I wasn't sick and I actually could trade a little bit more than I was in bed for a lot of it, it would have been my best week of the year.
And you didn't
How
trade
is
on
that?
Monday.
But people, you know, how is that possible? Well, it's possible because I don't make money because the market goes up. I don't make money because the market goes down. I make money because the market becomes inefficient. I make money from relationships and understanding relationships. I got up this morning, and what was I doing this morning? I was selling the hell out of all the growth tech names. That's what I was doing. I was actually positioned. I had a few tech longs, and I'm like, I can't have any of those. I was up at 4 a.m., and all I was doing was hammering bids in tech because I'm like, they were all bid up,
They're all up.
everything,
I
they
know.
were all up. Nvidia was at 310. You know, there was Amazon. I sold my Amazon at 3407 or so. It was up $20, and then they've come back a little bit, some of these from the lows. But the point is, you just got to have, you know, you got to be in that zone. You got to have the feel, but you got to take advantage of the relationships. And you could see it, you know, that there's tech stocks rolling over here. And when you start seeing some tech stocks roll over, it's predictable that the other ones are going to roll over too. Those are strategies. Those are edges. You know, you keep the leaders on your screen. They start losing. They start going down. Then it drags down the other ones with them. They don't all go. You know, middle of the day, they all goes at the same time. But at the open, pre-market, after hours, at the close, it's all a little more inefficient, especially at the open too. So you got to take advantage of those pricing inefficiencies.
I guess my hypothesis was, you know, we hinted at not we hinted he said a taper and probable rate hike. If we can just get more clarity, if the market gets a little bit more time to adjust to that idea, then maybe that's all we need is time. Once people reposition themselves or money managers, whatever, then things are okay again, right? It's sort of my point, right? Is like just because a rate hike is on the table or two hikes are on the table and the taper is on the table, it's gonna happen faster than we thought. Just because that happens doesn't necessarily mean we have to see what we've seen the last couple of weeks. It's just the market maybe just needs some time to get used to the idea.
But here's counterpoint, Spencer. The last 10-year bull market has happened because we've had a punch bowl. The last 10-year bull market has happened because of the Fed. The whole bull market started like back when did they start? You know, with quantitative easing, Joel. Go back to
Oh, that was
QE,
even
like
uh,
2009,
Yeah,
2010,
yeah.
after the financial
helicopter
crisis.
Ben.
They
Yeah.
never stopped. So for 10 years, the printing press has just been spitting out money, and that money has just found its way into stocks. If they are going to slow down or potentially stop the printing press, this is not something that the market has seen in the last 10 years. So I think it's
Well,
prudent to be careful here. I think if you're just throwing risk management out the window, and you're just blindly buying stocks here, you're not reading the tea leaves. And maybe I'm wrong. Maybe we're just going to go back what Spencer Israel saying. Maybe the market will just adjust. There's no other place to be. There's still the Tina trade, which is Spencer Israel. That would be your, you know, side of if to be right here is there is no other alternative. I can't go to bonds. I just sit in bonds at 1.5% lose to inflation. So this is why I haven't sold all my stocks. This is why I still own stocks. It's the only reason.
Hold
But
on.
the kind of stocks that I own are not anything growthy. They're all value. And you know what? Value
I've
stocks
got
are
a
doing
chart
well
up
right
on the
now.
screen. I've got the Fed funds rate on the screen.
Sure.
Okay? It did come off the floor. The Fed did try slowly, very slowly, to unwind its balance sheet, and they did an okay job. They were making progress, right? They were raising rates. They were unwinding their balance sheet, and until the pandemic hit, and it sort of changed all that, right? But like, we've been here before, though. 2015, when the Fed said, "Yeah, we're raising rates. Everyone get ready because we're doing it," and then they did it.
Yeah, but for
And
how long? What do we raise? 1% total? And
yeah,
that's
yeah. So okay, so it went to 2%, a little over 2%, right? We've
it
been
didn't
here
go
before.
crazy though.
What?
It didn't go crazy. I mean, we're not back in the 90s. I mean, we have
But
inflation. You can laugh at that.
it would
You
have been
stop. You
going
can
up.
but you can laugh at that, Spencer.
I
But we
know.
have inflation like early 90s. We have interest rates that are a fraction of where we were back then. What does that mean? I don't know if anybody knows what it means. It just means that you're losing big time to inflation. I don't know how, I honestly don't know how the Fed gets inflation in check without jacking rates up to 5, 6%, and then everything comes crumbling down. So I don't think they can. I don't
The
think the Fed
inflation's
can
gonna.
raise rates
Yeah,
enough to even slow inflation down.
yeah.
And I think they're out of bullets. And I don't know what the repercussions of all this are because this all worked. This, printing press has worked up to this point in time because we've never had an inflation issue.
Well,
At least, not an obvious one. We know inflation's always run hotter than the bullshit numbers that they feed us in the CPI, but it isn't running like this. Like, talking to another contractor last week and he was getting a quote on something. I forget. It was well, I talked about the drywall, but on something else again. And he said they quoted me $5, and then I called back the next week, and now it's $6 a foot. I mean, it like prices of stuff. People are just jacking prices because they can right now, not even that they have to. It's like an excuse. Oh, COVID. So we're just jacking prices. So that's where the problems lie. Is that demand is so bloody strong.
yes. The Fed's not going to be able to fix inflation because it's not a demand problem; it's a supply problem. We all know this. If the supply problems get worked out, inflation should go down. But we don't. That's a big if. So
Well, and it will. I mean, we're running so hot right now. It's going to come in a bet. It's going to come in a bet. But are we coming back down to 1% or 2% a year? I don't think so. I think wage inflation. I think there's everything going on here.
all right.
So
So all right.
it's a problem. All I'm saying is there's some major problems here. So I think it's prudent to sit on some cash or to at least. And I don't know. Cash is bad too. So I don't even know where you sit. It's a really tough market right now because you sit in cash and you're losing for sure. So I'm not even sure where to go right now. Normally I would go to cash because I'm like, oh, 1-2% a year you lose to inflation is a big deal. But if it's 6, 7, 8% a year, it is a big deal all of a sudden. So I, this is a different animal. We haven't seen this. We haven't seen this low interest rate environment with this much inflation ever.
In terms of where you hide, you guys talked about value earlier, maybe before
Maybe
we started, but like
Tacos.
you can look at Home Depot or
Tacos.
Lowe's
Hide in, hide,
or tacos. That's a great
let's hide
example.
in tacos.
Joel,
Okay, take us away from this conversation.
I actually because if you recall everyone, Jason Raznick was very long.
Is he
Del
still
Taco.
long?
He was very long Del Taco. So last year, or maybe earlier this year, I don't remember when. So as soon as I found out, I saw the deal. The headline this morning was that Del Taco is getting acquired. Right, TACO is your ticker. They're getting acquired by Jack in the Box for $12.51 a share. So I reached out to Jason. I said, Jason, are you still long? And I actually got a video response from Jason this
Oh,
morning.
nice.
And this is that.
Wow.
That was Jason celebrating this morning. No, in truth be told, he's told me he owns a little bit, just a little bit. He sold most of it. But anyway,
Nice that he
TACO.
owns a little bit. That was a great call by him. I was actually in this trade with him. This was a reopening trade, I believe we
Yeah,
had it
it
on
was.
for.
It was. Yep.
Going back to like I think me and I bought it at the same time. Jace came on the show and he pitched it, and I was like, I like that too, and I bought it too. I can't remember. I feel like we bought it like $6. Didn't we buy it like 6? Joel, did you buy it too?
Perhaps.
I did not buy it. I did not buy. I'm not. I don't like
It was a good
tacos.
one though, and
I
I
like
eventually
tacos
sold
when
around
Lisa
9.
makes them.
I think
I don't like.
I made some good money on that one. That was a Jason Rasnick pick, and I made some good money on that one. I moved on after me. I'm always out too soon, anyways. And obviously went to 12, and now it's 12.50. So congrats, Jason, for still holding a piece. I didn't hold any, but it was a great call by you on our show about 1 year ago on our
Yep.
show, Jason
Yep.
Rasnick.
Yep.
Yeah, 12.51's the takeout price. Just opened at 12.37. How big of a deal is this for Jack in the Box? I don't see that reopening. Is this going to be? They're going to hit the old acquire on this one, or is this a
Well, it's
fairly
cash,
small dip?
remember?
It's a
Okay.
Right.
Nice
Yep.
educational spot. Next minute. So cash deals, they do not bother with the acquire because you don't have the risk. You don't have ARBs coming in there. There's no ARBs. So it's all ARBs. You got to understand when you do a deal, now all of a sudden it's just all that matters is that price and that ratio. So if they don't jack the company getting bought up right to the price, and in cash that doesn't apply. But sometimes they say, oh, it was a stock deal, and the stock opens at 11.50 and it was 12.50.
They'll
Okay,
hit
well, to
right.
make up the difference, they hit the acquire. So how do I know that? Because I do that. I mean, this is what our whole firm does risk arbitrage. So that's what happens. So cash deals, they typically don't hit the acquire nearly as much because you don't have the risk arbitrage effect. There's no trade to short Jack and go long taco. It's just long taco is 12.35, 12.51 time value of money. That's it. So that's why you won't see Jack get hit. So only on stock deals or stock and cash deals will the acquirer potentially get hit.
Is the
Usually
street
the
just going to
case.
love it and just think this is the greatest deal and
Well,
look
and
at
that's different. So
the
you're not gonna have the
quad bottom?
arbitrage effects.
Quad bottom there? No, I know. I'm just looking at the
Yeah.
quad bottom at 81, big buyer at 81. Can they protect that level, get it over 85? And then it's got some, because it's had a big run up. Great monthly support at 80, 81. So, I mean, the other reason, we'll see. We'll see if that quad bottom holds. This could be a night if they like the deal. Let's see if they jack in the box.
I, I
I don't see any trades in it right now.
I don't. Yeah, it's trading odd lots there. I don't think there's going to be a big move here just because of this deal. But you never know. You're right, Joel. Somebody says, "Oh, I think they overpaid. They might hit it too." So
Yep.
it's going to trade freely though. There's no risk arbs in there.
We never talk about Mickey D's, right? I mean, that stock, it's had a nice run, had a pullback to
Yeah.
support.
Yeah, some things are holding up. McDonald's, Home Depot, Lowe's. There are some areas
It's
of the
value.
market they're
It's
not
a
getting.
drive-through indicator, man. I'm
What?
telling you, these drive-throughs are just packed. People can't wait long enough to get cold food. I
What's
mean, it,
It's not
I
cold when you get it.
Yeah, what are you gonna do, eat it in the car? I mean, I don't know. I mean, they're there. You can't argue with it. Just for you Mickey D traders, you've had about an 18-point break, right? No, not even that. 14.7. Let's see what happens to this 251, 252 area. See if it can clear that 50% and go back and test the all-time high. And what else is there? QSR. I mean, these aren't going to move off this deal,
No,
right? Because it's a
no,
No,
cash
no,
there's
no.
deal.
going to be no
You
movement. Even the Jack isn't going to move off this deal, so we can't look at
okay?
sympathy on this. But what we can look at is it's a great point you just made. McDonald's, Home Depot. What are these? These are value stocks. I mean, these are holding up well because this is value. This is where money goes to hide. It's moving from growth to value. The question is, if growth really starts to get ugly, then we know we have a playbook for that too. What do? They start selling everything because they start selling, basically what Kathy's doing. She's selling her Tesla to finance her other losers. You will see money managers that need to finance their losers by selling their winners. So if the growth continues to get ugly, they will eventually start to sell everything. There will be no hiding place. So just be careful if you're just piling into McDonald's and piling into Home Depot and piling into Procter and Gamble at all-time highs. Because if we really start to get ugly, those
They
stocks will
sell
start to go
everything.
down too. They do.
Yep.
They start to sell everything. Now, I don't know if that's the case, but all I know is the S&Ps are 4% off the all-time highs. This is not even a significant pullback yet.
Nothing.
Nothing.
Absolutely nothing.
So am I
It's
coming here and buying stocks and buying value and going all here? Nah, it's way too early to tell. Maybe once we start to stabilize, but we need to start stabilizing in growth, or the S&Ps are going to start to leak too, because they will start selling everything if this continues to get as ugly as it
It,
has been.
I'll tell you right now, if we hold the lows from last week, the first couple days here, I mean, we do have, and I'm so glad Topsy got the rollover coming. And when you get that rollover, you get kind of the action that you saw last week, is they roll the SEP over for the yeah they'll no the D. Oh wow, getting in next year. If you're long the D's, you got to sell the D's and buy the March, and then vice versa. And the volume starts to move over. It creates these air pockets, which you saw last week. But I mean, everything that we're saying, the market, I'm just from the S&P perspective, I don't know what your stocks look like, but you really have as clear a line in the sand for support as you can get. And those are the two lows from last week. That was one hell of a rally off in the last 10 minutes of the session yesterday, Dennis. I mean,
On
I could
Friday, it was
see
wicked
that
rally.
was unbelievable. It was like, okay, we're going to close the lows, close the lows, close the lows, and they turned around. And I was going to say, wow, are they just going to take 15, 20 points out of the spoos right away? Because it was juice, and it was extra. And no, instead they took it up
It
40
jacked it
handles.
up another 10.
I know, I know.
So I
And
came
what about
in.
the open on Friday, Dennis? I mean, how many people got caught hook, line, and sinker on that open?
I
Because
pulled
you
the rug out from
popped,
under
you
it.
got above the pre-market high.
Well, I think it's
Things,
going to happen again today.
I think so too.
I think this is setting up the same way. You have all this air. We literally were, we rallied 40 handles, like you said, basically in the last 15 minutes of trading on Friday. And now we've tacked on a little bit more because, Omicron is not looking as dangerous. But this is not, again, people piling into reopening. You can clearly see that trade here this morning. But Omicron
Oof.
is not the problem here. And there's money managers that believe that's the problem because, and this is how you make money, by understanding what is the real problem. The real problem is the Fed punch bowl is suddenly looking like it's going to be gone. And that is the problem. And so there's people piling in this morning saying, oh, it looks pretty good over the weekend. The stats are saying maybe it's not as deadly. Nobody's not as many people dying from it. That's good news. It's good news for the world. I love that news. But is it good news for the markets? No, I don't think it's the issue. So I think this is another opportunity to sell. I would be a seller of this rally here this morning.
All right, chat's asking like, what are some good value ETFs? You really gotta look under the hood. Don't just don't just Google value ETFs. You say, oh, IVE, the iShares S&P value ETF. Don't and just because it's got value in the name does not necessarily mean it is
Great
like a
point.
true value ETF. You really gotta look under the hood, see what do these things own?
Yeah.
Do they own? And it's not their fault. It's not their fault if they've got like some higher growthy things in there, because these things are all pegged to an index, right? So if things go higher, then stocks go higher, it sort of takes the value out of there, and that's sort of the point here. So if you're looking for value ETF, great. Google value ETFs. You can go to tools, like ETFDB is a good one, and you can just look. But like, you got to look under the hood though, because a lot of these things, even
It's
if they
true.
say value, there's probably some higher growth in there too, right? And
IVE actually is a pretty good value one though. So I
I
mean,
don't,
maybe it was
yeah,
a bad example, but
right here,
it's actually got Berkshire Hathaway. Looking at the top holdings right now: J.P. Morgan, Bank of America, Pfizer, Disney, ExxonMobil,
yeah,
J&J,
that's pretty good,
Cisco. This sounds like a PE of like 20,
yeah,
so or less.
yeah.
So this is kind of fun that is holding up well here right now. Again, I am not, we don't make recommendations on the show. Just saying what I'm doing is I'm not buying value right now. I'm
Yep.
position value because that's what I've been positioned
Yep,
forever and
for for
underperformed the
100
market for a
years,
long time because of it in the long-term account.
which is
Um,
fine, which
which
is
is
fine.
fine because I can sleep at night, and I don't lose 80%. Like my long-term retirement account, I think it's off 1% or 2% from the all-time high. I'm not joking.
Oh wow.
So, like, that's not even my trading account. My trading account is exploding right now because I'm trading and I'm good at trading these kind of markets. But the long-term retirement account is like near the highs, and
I,
that's because I'm in all that value stuff. But I don't think I'm adding to it here. I'm kind of scared that it might start cratering too. So that's why I'm like, I was talking to my wife. I'm like, our account is almost at all-time highs here, and a lot of stuff under the hood is really getting hammered. I almost feel like going to the sidelines to cash for a month here and then reallocating it all, but obviously I have gains and I'm not going to start.
Too
Yeah,
hard to
well,
do.
I'm up so much in some of these stocks, and start wanting realizing all these gains they've had for years. But it's not like this is the kind of market where I want to come and now I want to buy value. Value has helped in the last month because it hasn't been getting hit. And some of these stocks like Procter and Gamble have actually made new all-time highs. But again, if they really start to hammer stocks, if they
They'll
really continue
hammer
to hammer growth,
everything.
they
Yep.
do. They eventually start to hammer everything. So don't think just hiding in value right now is going to keep all your cash safe.
And this is when and if they'll start hammering things. If we take out last week's low, that's
Yeah.
it.
So I
Yeah,
don't think
that's
we're out
it.
of the woods. I don't know. I didn't turn around and sell everything either. It's a really hard market to call here. Really hard
You know
market
what?
to call.
You know what? Also, the market's so good at doing. Like we're like, oh, we're gonna crack this 44.90 and go down to 43.20, or and some people are just so convinced we're gonna bust above 4600 and go right back to all time high. These guys don't know what they're talking about. What the market loves to do is look to the right and just grind you a little bit. I know we've had a lot of volatility, so it's hard to say we're gonna calm down, but look at that. You're working on an inside day right now, right? What if you get a couple inside days, heading into the end of the week? Then you're going to get the fireworks. But
All right.
this area on the downside, I'm giving you two good levels. I'm actually dating it this time. Did it over the weekend. I'm marking 12/6 as the trading date. So we know we have the time orientation and we have the price. Where's Mr. Quast? Is he
He's
hiding?
he
Is he
knows.
hiding under his desk
He's
or
here.
what?
I'm waiting for an opening to bring him in.
I know we talk too
You
much.
guys are rolling here. We
Too
got
bad we don't get paid by the
Get
word.
Tim. We love Tim.
let's
Come on,
get Tim,
Tim.
let's get him on the show.
And Dennis can do his little dance.
Tim Quast, founder, CEO, Market Structure Edge. Tim, what's up?
Good Monday morning to you guys.
We,
I don't even know what an inside day is, Joel. You're going to have to explain that to me.
Well, it's like
Dennis,
during the
nice to see you
pandemic,
back.
you don't leave your house the whole day, and it's called
That's not an inside day.
it's an inside day.
That's an inside day.
You don't go anywhere. Hey, I went to downtown last week. I'm going again this week, so I'm breaking out. Inside day, easy. We'll teach everybody this. You trade within the previous day's range. You don't see the previous day's low, and you don't see the previous day's high. And what
is
you
that
like to
good?
see is a couple inside days. And then people
Oh.
are like, oh. And then in theory, call an inside day, two inside days, you go with the momentum, right?
I
To the
see.
upside. And
Okay.
then it gives you, and the other thing that's nice about those trades, if you do have those inside days and you follow the upward momentum,
Yep.
you don't have to wait forever in the day to find out you're wrong, right? Because if it breaks out of it and then comes back below it, you're like,
Oh.
we're still staying in this range. So is that a good explanation for you?
It is. But it reminds me of a Shakespeare line, which
Me
I mean,
too.
wouldn't it? Right? Yes.
Long
So,
to be or not to
from the-
be? That is the question.
from the widely read Coriolanus,
My
one of
favorite.
the last two tragedies that Shakespeare wrote, he said, "A very little thief of occasion will rob one of a great deal of patience and maybe money." So you have to be very, very cautious about those thieves of occasion. Like, ooh, it's right there in front of you.
That's not what the
I've left everybody speechless.
that's not what the footnote version said.
I was
You
very,
got to read the
I
little
was
yellow
very poor in
books.
English class. The Shakespeare books that we were supposed to read, a lot of times I didn't read them. I'll
Those
tell
are
you right
Cliff
now.
Notes. Cliff Notes.
Joel
It's
never
very
read any of them
popular.
either.
I also may have.
So I had the great fortune to go to a tiny little rural school with about 100 people in it, and so if you were an overachiever, which of course I was, then you would. Then the superintendent would put together a Shakespeare class and teach you Shakespeare. So I learned Shakespeare when I was 18, and it was huge for me because none of it made any sense until I understood it. and
Still doesn't make any sense to me.
it's like market structure, Dennis. None of it makes any sense until you understand it, till you get the building blocks.
All right, Tim, tell us what the market structure is saying right now, because now we've had 2 tough weeks in a row here, and people are
Right.
starting to question their everything.
Well, I'll give you good news and bad news.
Great.
So the bad news is we are at the worst sentiment of 2021.
Oh,
Interestingly, so we have gone, which has never happened in the whole time that we have run this little algorithm that we call market structure sentiment, which has been for better than a dozen years. Have we gone a full year without dropping meaningfully below 4? It's a 10-point scale. So the market tends to spend its time between 4 and 6. Here, I'll show you. So we are at the worst reading of the past year. And so the bad news is it's bad. Bad news is that's no good. The good news is those always mark bottoms. It doesn't mean it happens immediately, but they are historically every single time that the market has dropped below 4, it has marked a bottom. If we back up, I'm just going to back this all the way back up 3 years. I'll zoom it in so you can see this. So here was the giant bottom of the pandemic correction. These are the all-time lows that we've ever recorded. And so the good news is that was a bottom. If you had the fortitude to recognize that it's not a little thief of occasion, but a real opportunity, you could, and I did, I put money in there. I was a little bit early, but I did because of that. So if you looked at each of the times that the market has dropped below 4, it has marked a bottom. It has occasionally had a second bottom that follows it, and probably there's some technical explanation for that, Joel, that you would know better. But here's where we are right now. This is the worst reading all the way back to 2020. We had one of these in November of 2020. November 5th of 2020, we dropped all the way to 3.2. But notice what happened after that. The market was an absolute rocket sled. Now, I'm not saying it's going to be. I think we should talk about why tech is struggling, but we are nearer a bottom than a top. So the question is how long it takes to recover. One of the things that the data show is that it tends to take a couple, 3-4 weeks.
But Tim, we're looking at the S&P, and I mean, we're down 4% from the all-time highs. This is not even a significant sell-off. This is not even the biggest sell-off of the year, which somebody was just saying in the chat. We've been down as much as 5.2% this year. So really, the S&P,
exactly,
and the S&P is probably, not even close to even a correction here yet. So
not even close.
So.
Right.
Is that where you're looking? Is like looking at that, the S&P overall here, or do you get a completely different reading when you look at something like ARKK?
Yes, clearly you would. This is the composite data for the 500-ish stocks that make up the S&P 500. So we take the sentiment readings for all of them and create a rolling average, and that's what this line is. And then we compare it to SPY, just a proxy for the S&P 500.
Yep.
And so that's what we're looking at. And of course, that will smooth out the pockets like ARKK, which is heavily concentrated in tech. And tech has taken it on the nose. There's no question. Here's the interesting thing to me about tech. If you look at tech, let's go down here and look at the whole sector, because we can look at the whole sector the same way.
Sure.
And here it is, comprised currently of 445 components. The lead behavior is fast trading. That's Citadel, Virtu, Hudson River Trading, 2 Sigma, Quant Lab, Infinium, GTS, on it goes. And notice this, that it's actually bottomed. The tech sector has actually bottomed very low, one of the lowest, again, perhaps lowest reading of the year. And look at the supply side. So short volume was very high. So everybody shorted tech as demand vanished and tech imploded. But now that's beginning to turn. Short volume is beginning to come down. Excess supply is starting to recede, and demand has bottomed. if those things reverse, tech is going to boom. I'm not saying that's going to happen. I can't tell you where the money will go. We can watch where it goes. That's the good news. Rather than trying to guess, we're just going to watch that. And you mentioned Procter and Gamble, Dennis. There's no question that when the market does things like this, it's going to move into low volatility stocks. Same thing we tell people. We highlighted HPQ. Hewlett Packard has been awesome. We've
Yeah, all-time highs
highlighted
too.
this.
Or
Yeah,
not all-time
exactly.
highs, but 52-week highs. Yeah.
And it's a tech stock, but look at the divergence between demand and supply. When demand and supply diverge, I don't care what the market is doing, there is opportunity. And that happened there. If you look at Clorox, what did Clorox do? Well, it's not quite as good, but demand was very stable at 5. Supply is a little over trend, but tipping down. Here's where you really saw the value move. Right here at Thanksgiving. It was right around Thanksgiving when money said, okay, we want to be cautious because we don't know what's going to happen. And we looked at Apple. Apple was a hedge. We could see that in Apple. Procter and Gamble right here, Dennis, that you were talking about. So look at this. It's never not a 5. It's just a perfect 5. So if you're concerned about volatility, park your money in Procter and Gamble. It's the place to be. Supply is a little
That's what
high,
people.
but yep. But it's crazy how well that works. It's a great lesson for traders. Traders, when the market turns volatile, put your money in the 5s. When the volatility diminishes, go back to growth. I'm with you, Dennis. I don't think that this marks a sudden shift to value. We in the data can find no evidence except a little bit on Friday of any kind of selling by big money. It's been all fast trading. There was a little reactionary active stop loss selling on Friday. It's the first that we've seen. Now, if that compounds, then we'll have more trouble. But there has been no passive selling to speak of. And it tends to be that passive money returns in new months, it doesn't sell in new months.
We've got the tale of two markets here, and and obviously, like I've talked about my long-term portfolio, which is value oriented. I've always kind of been a value guy since I got my butt kicked back after the 2000. I kind of learned the hard way is that I never buy a stock with a PE over 30. It's just not in my long-term account. And I'm looking at my value driven portfolio and it's sitting up near all-time highs, and you could and there's a lot of other people are probably value investors saying, you could probably look at Berkshire Hathaway, Berk.B, and say, wow, it's a little bit off the highs, but he's nowhere saying, whoa, this, where there's carnage in the streets everywhere. He's like, what carnage? There's a lot of portfolios that are doing very, very well still. And then you've got these growth oriented portfolios. It's a completely different animal that they've been imploding for the last month to the tune of 30%. So does this trade just reverse itself again? That's what I want to get to the question. Do we eventually just go back to the trade that has been working for the last decade in the high growth names, because the high growth names are all on sale?
They sure are. So my answer to that, and it's not a strategy answer, it is a purely common sense answer, that if roughly, I'm going to say roughly 50% of market cap, if you look at tech, communication services, consumer discretionary, there is tech in all of that. That if you look at tech in the market, it is almost 50% of market cap. So unless we're going to see passive strategies dissolve, then the answer is yes, we're going to go back to it. I mean, I think at some point, our very profligate use of currency is going to catch up to us, and our market will become the Japanese market, incapable of rising. But I don't think we're anywhere near that. So absent that, and absent a sudden destruction of passive strategies, which I don't see, and I don't think it's going to happen so long as we have Reg MS, then yes, we're going to see a reversion to growth merely because that's where the money is.
Tim, could you go back to that first chart that you had showing the S&P composite versus the SPY? Could you go back to that?
You bet.
Because I was looking at the top for the composite stocks versus the SPY. All right. I mean, this is much different here. You had everything on sale. Could you say the only reason that it's holding up here is because of 5 or 6 stocks? And if we lose leadership in those stocks, you could easily get something like this or like this. I mean, because this is like you look at it here, and it was probably a much better representation of the entire market. Here, you're looking at this thing coming down from, the indicator coming down. But I mean, is it like I said, is it just those 5, 6 stocks that are almost 25% of the index holding us up?
Could be, right. It's one or the other. Is it that the market is down the amount that it is, and sentiment has declined to the degree that it has because there has been trouble in big tech? It might be that instead, in which case most of the market is fine. Now, clearly, the small caps have suffered, but remember, they're only 5, 6, 7% of the market at all.
Hmm.
It's such a small part of the market that you can't look at the Russell 2000 and draw any form of broad conclusion. The S&P 500 is a very nice representation at 85% of market cap and a good blend to me. So I don't know. I think maybe the answer is let's go look at the fangs, because that there's the bulk of market cap. What are the fangs telling us is going on? Well, you could see the fangs absolutely collapsed. So this collapse in demand, and once again, it's the same behavior, fast trading. I have 11 stocks in here, just things that I put in this portfolio. But look at the supply side too. The supply side was very high back here, and now it's come way down. If we look at the components here, does this explain to us what is going on? Well, I think in large part it does, because roughly half this group is below 5. So Netflix, Shopify, I put Shopify in there, Facebook, both Goog stocks, Amazon, all below 5. AMD, Microsoft at 5. We don't have anybody doing really well. All of these trends are either bottomed or down. But if they're bottomed, I mean, look at this. If we have a surge back into tech, Netflix is going to scream, because look at the demand and supply. The supply side has collapsed. The demand side has too. If this moves, so is Netflix. If Shopify, I mean, Shopify, does I look at this and say, wow, Shopify could go up $300-400 if there's a change in demand. AMD, I think AMD is a fabulous. Look at that. I mean, demand has come down to 5 and supply has absolutely collapsed. I look at those and say, if there's any form of institutional money coming back into tech this week, those stocks are going to move, and we're going to be off to the races into Christmas. I'm not saying that's going to happen. I'm saying there is the possibility of that.
All right, Tim Quast is the founder of Market Structure Edge. Joins us every Monday from Market Structure Mondays. Learn more from the link in the description and chat. Tim, a pleasure as always. Have a good one.
Have a good week, guys. Good to see you.
Before we moved on to some more stocks,
Yeah.
there was a comment in the chat about, the market has to go down because there's such a large open interest and people are buying puts in the S&P 500. Folks, sometimes those are just long hedges. You have
Yeah, they're
absolutely
mostly long hedges.
yeah, they're mostly long hedges. Remember when 50 Cent was coming in the VIX, and every time it got down there, if you're buying $1 trillion worth of stocks and you spend a couple hundred million on VIX calls or puts, I mean, trying to read into that is
Hard.
so difficult. There's so many different strategies.
Yeah,
They could be covering a position. Who knows? So
yeah.
rely on your own indicators and whatever technical or fundamental analysis you use, but seeing the extremes in these puts and calls, you never know what the people are doing on the other end, especially those big positions.
Yep. All right, we got to talk a little bit about Lucid here.
Woohoo!
Lucid, yeah, I'll bring up the SEC filing in Benzinga Pro, 8K filing out this morning. Lucid, look, they have to do this. This is what the 8K said. On Friday, was it Friday? Yeah, it was Friday. They received a subpoena from the SEC requesting the production of certain documents related to an investigation by the SEC. Although there is no assurance as to the scope or outcome of this matter, the investigation appears to concern the business combination between the company, between them and the SPAC, and certain projections and statements. The company is fully cooperating fully with the SEC in its review. Now, Lucid's hands are tied. If they get a subpoena, they have to tell investors, even if They don't think this is a big deal. What they cannot say is we got a subpoena, but don't worry, it ain't no thing. We think this is small potatoes. Okay, now the market does not care what Lucid thinks. This is the timing of this really couldn't be worse.
No, it couldn't be worse.
Because I forget where we said this, if it was on this show or a different show or maybe even off air, but we were noting last week that if you actually looked at Lucid, it was holding up pretty
Only up really
well
well.
relative to all the other
Yeah.
ones. That the same cannot be said this morning. Obviously, it's down below 40 now. So even my point is, even if this is a nothing burger, A, Lucid can't say that, and B, it doesn't matter because this is the last thing that this a stock like this needed was an
Yeah.
SEC investigation.
Yeah, it was unbelievable relative strength. Everything growthy that's trading with ridiculous valuations has been hammered. Here's Lucid that's just saying, not us, and it has just been unbelievable. The relative strength. So now it gets hammered. So I mean, is there, if you have any growth stock that has a chart like this that hasn't been hammered yet, I think you get the hell out before it gets
There
hammered
aren't many
because
of
they're
them
coming
left.
for you.
There's not many of them left.
No, there isn't, but that was a good one. Rivian, what about Rivian? I mean, does this eventually breach 100? Is Rivian
See.
like
Oh boy. Oh boy.
is it setting up? If
That's
it
looking
eventually could
heavy.
take out that IPO low 95, and this was a darling as much as 2 weeks ago, so it's come off. Like people say, "Wow, it was 170." It's really come off. So maybe it's not the greatest example because it has come off a long ways from the highs. But holy mackerel, that Lucid chart though, just looking at that had this silly run up,
Look at
and now obviously,
100. Wow.
yeah.
100 right on the
What a
kisser.
gift! What a gift that was holding up so well to anybody who wanted to get out.
It's still holding
Obviously,
up well. I mean,
not a
what
gift
was
today. Like I would not be
yeah.
the buyer of this. I think you sell rallies.
Yeah, we see when the undercut of the IPO low, that's 95.20. It hit $100 yesterday. You see what happens with that
Right.
if that takes that out. Wow. Wow, they gave it back and then the bounce was just very muted. Now you're still look at resistance at the close yesterday. What was your closing price? 104.67. And if it takes out 100, boom, the only thing you have there is that all-time low, 90, what was it? 95.20. Yikes.
And Frank Ash just called out a firm to me because it's back almost at 100. And like even if it's a company that you like, I, you know,
This is on my shopping
I
list.
wanted to buy
Here,
this. You guys know I did
yeah.
buy it, and I sold it at a loss. I can't be buying this now. You
It-
just
It's a
can't.
different chart. This is
It's a
well,
such a
different kind.
different
You
chart.
just can't.
you can, and you know what? I'll argue with you. And here I'm going the exact opposite of
Come
what we've been
on,
arguing the entire show. Maybe I just like to argue. I think
Yes.
some of these names are going to be the first ones back. So if you do are so inclined that eventually you think this growth thing's turning around, that the Affirm is, it's went from 160 to 100. U is another one that's come from 210 down to 140 here now. These are now oversold. Some of them like Lucid hadn't participated in the growth sell-off. That's the stuff I'd be selling, the stuff that hasn't sold yet. I don't want to be a hero though, and just say, and you're right, Spencer. I don't want to be the hero saying, okay, 104 is the bottom.
Yeah.
But if you can get like a nice day and get some stabilization, this is the kind of stock that is on my shopping list. So, and not long term, but this is the kind of stock that could
Alright,
make new highs again. I mean, this is
alright.
still a sexy name. Story hasn't really even cooled off for a firm. It's just cooled off for everything growth. So I would say a stock like a firm, I would be looking for an opportunity to potentially get in if I was so inclined to buy growth stocks right now.
Wow.
This would, if I was buying growth, this is the one I would buy.
But you're not, so you won't. That's the takeaway here.
I'm not buying anything. I'm buying. Somebody said, "What are you buying?" I said, "I'm buying cash. I've been buying cash
Yeah.
on rallies. I continue to raise cash. I sold my Las Vegas hands. I hedged my Mastercard. I brought my cash holdings up from like the 20% they were probably getting close to 30% in the long-term account. And then I'm just trading. I'm buying dips, selling reps, selling short reps, and buying dips. I'm just continuously doing that in the trading account. So two hats: trading, long term, just slowly selling into rallies.
I'm gonna hop here in a
Buying,
second.
not I have not bought one stock in the long term account in the last month.
I haven't
I don't even think one stock.
bought stock in like 4 months, Dennis. What's up, Joel?
Because everything's been
Well,
nuts and
first thing,
overvalued.
no, I'm just gonna wrap it. I go over and missed a bunch of symbols here today. I just want to. I'll be talking about not only Lucid, but Tesla has an interesting setup. Just in the S&Ps, I mean, we're holding up. We're up 19 and a quarter handles. We're holding mid range on the session. I think, let's get through that first 15 minutes, that first half hour. If this market could hold on here, take out the pre-market high. I don't think we're going to see yesterday's high of 4,600, but just have your radar up off that open and see if we can hold in, not have that quick 15, 20 foot drop. If we can, then let's take out that pre-market high and work our way up. And Spencer, I'm going to hop off.
Right.
Make sure you mentioned that event. It's coming up on Saturday,
I
so
know we got two events coming up this week. I'll tell you guys all about it. Have a good one, Joel. Have a good one, Dennis. We're gonna go to live trading here in a couple of minutes here, but before we end this show, I wanted to plug, and I put this in the chat. It's pinned to the top of the chat. The final pre-market prep special of this year is this Saturday, 9 to 11:30, 9 to, I don't remember when, 9 to noon, I think. I don't remember how long it goes. Okay, so check it out. The link is in the description and in the chat. Um, Dennis will be there. Joel will be there. I'll be there. I think Mitch will be there. We'll all be there. It's going to be a fun time. That's the first thing I want to say. Second thing I want to say is before that happens, this week, specifically Wednesday and Thursday, is the final virtual conference for Benzinga of 2021, our last small cap conference of the year. It's going to start Wednesday after this show and go all day, and then go Thursday after the show and go all day. So we have, for the last time this year, we've got like 40 companies, somewhere around there, together to give presentations to you. You can ask questions of these CEOs and CFOs about them, about their companies going forward here. So that'll be Wednesday and Thursday right here on this channel. You can go to Benzinga Small Cap to learn more. And I'm going to end the show today with a trailer of who will be there this week.